All right, welcome everyone. This is Bob Maurer. It is Friday, the 14th of March, around about 2 o'clock my time. Want to do a review of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. Bit of housekeeping. We had one that went off the board, so we'll see how that one ended up, but we have three that are still ongoing. So let's hop into it. Dialing into the portal, you'll see the most current PDF version. Click on it, and here you have it. This will be for going into next week, the week of 3/16. And here's what we are dealing with. So, top row 347, bull spread in cotton. We'll look at that one. That's ongoing. And we should be in at 348 crude oil flat. This one timed out. Look at that one. 350 bear spread in live cattle got filled today. Don't forget I did revise it recently. So this 265 level, first entry point for those who are willing to average in and deal with that risk. That should have gotten filled today. And then we've got the bear spread and feeder cattle bottom row number 351 that we are waiting to see if we can get on board with. All right, so let's hop over to the charts. All right, first things first, let's look at that crude oil that went off the board. This is strategy number 348. Went off the board on the 7th. And I think it timed out on the 8th, but we got out on the 7th. Basically, this thing was benchmarked at 39 and ended up at 40. So we did see this spike up. Okay, but this spike up happened before I revised the target lower. So even though it looks like it could have been filled, it wasn't. So bear that in mind. So basically, it had the big rally, got close to getting us, but then walking it forward, I moved the targets down, moved the stop up, and this thing ended up just petering out right about where the benchmark was, where it started. So kind of did what it was supposed to do, not as far as I thought it would go, but nonetheless, it did move in that direction. Then it had a pretty good fall back here on March 3rd, back in towards the benchmark. So net about a scratch. Let's put it that way. So that's strategy number 348, timed out pretty much right about where we got in. That one is now off our board. We'll call it a scratch. And then we've got the ongoing spread. So let's look at this here. This is number 347, bull spread in cotton. Let me blow it up here so it's easier to see. All right, so out of the gate, had a pretty good rally. Then it broke for about 2.5 weeks straight as cotton futures fell. Bottomed out about a week and a half ago, had a decent bounce. Okay. The only entry level we're in here is level 1. And I would say if you're still looking to get in this, I would not get in at negative 137. Let's go ahead and cancel that idea. Leave the stop about where it's at to give it a little bit of room. There's only a few more calendar days left in this, and we got 2 weekend days right ahead of us. So really 2 more trading days. And we need this thing to kind of turn around and bounce pretty quickly just to go break even or better on our entry level 1. So far this thing is not doing what it's supposed to do. It had a good rally out of the gate, but then cotton just got hammered with the tariff situation and such. So this thing has just been on a pretty steady decline, plus some supply and demand fundamentals. Good old school stuff came in that didn't necessarily support the market. Interestingly, price on the board for new crop December cotton futures is lower than break even to produce the crop. So it's going to be interesting to see how this market evolves over the next few weeks or so for those who have a choice to plant something other than cotton, especially in the dryland area. So we'll see how that all plays out. But right now, for our trade, we are sitting in negative territory. I would cancel this level to negative 137. I don't want to get on board down here now and keep the stop where it's at. And we hopefully will see a decent rally going into the last couple trading days, which will be Monday and Tuesday for this. So be prepared to get out on Tuesday. It's the last trading date. Okay. That's strategy number 347, our bull spread in cotton futures. And we got cattle here. So this one I revised on March 7th. Pretty much did a complete revision with raising the entry level prices and the stop, and also revising the targets 1 and 2. It looks like it seems to be a good idea that I raised that entry level 1, and we'll see if we can get entry level 2. But we did get through entry level 1 today. The high was 275. Our offer was at 265. So those who are willing to average in should be filled. And we'll just see how this plays out. So currently sitting with some level of unrealized loss, as we just got filled today. And we needed to head up to 325 positive to get filled here for the more conservative entry level 2. And then we need this thing to basically rotate back to the downside. Bigger picture, as you see, is we're basically been in a pretty well established range aside from this spike up here. This grouping about 2 weeks worth of trade. The high being around 300 and low being around 100. So about a 2-cent range for months and months and months. That's an $800 range. We basically want that to continue. So let's see this thing rally up and then fall on down. That would be ideal for us. All right. So the seasonal's in the driver's seat. I did walk it forward today, and I think our entry level 2 is in the ballpark. For us to get on board, could raise it a bit. That would decrease our odds of getting filled. So I just kind of want to leave it there right now, see how it trades next week. And, obviously we will adapt accordingly if something happens with the market. So all going according to plan. Finally got filled today. Currently sitting with a modest level of unrealized loss, and no changes besides that entry, that the revision that we did on March 7th. Last but not least is the feeder cattle market. So this is strategy number 351, bear spread in feeders. Let me blow this up so we can look at it here. Our entry level and only entry level is negative 165. Stop up here at negative 45. This market's basically been going the opposite direction for a couple weeks here since the onset back on Feb 27. So we need this thing to kind of find a bottom, rally, and then break on down again. This one's considered more counter trend, right? We've seen since mid-September this thing basically continued to rally with a few nice little breaks. So definitely found support on breaks. We need to again find support on this break, but not make new highs. So hopefully it pushes on up and then breaks on down. And I did walk it forward. Everything looks fine. Maybe the negative 165 is a bit not out of reach, but I would say that we've definitely decreased the odds of getting filled. But it is feeder cattle, and wild things can happen. So I just want to leave it where it's at right now. So essentially, no fill, no change to the strategy. See what happens over the next week or two. See if I need to adjust that. All right. So basically, a push on the crude oil. Cotton futures in the negative territory right now. The live cattle just got filled today, and the feeder cattle, no fill as of yet. All right. So I think that brings everything up to speed. If you have any questions, comments, anything of interest, feel free to let me know. And I am going to leave it there. And thanks for watching.